Welcome back to the channel. We're going over the S&P 500 and the Nasdaq 100, exactly how the stock market is moving, what you need to be expecting. Is the stock market crashing? Are we bouncing back? Now, what we're going to do is talk about these key levels right here. What happened at this highlighted point on April 6th and 7th, and why was it so important? You ended up double topping, and since that range, you have not been the same. And ultimately, we could say this started the quote-unquote crash or recession that we are now leading into. Now, before we go over the charts, we need to talk about that. What we're going to look at is what happened on that date. Now, the same thing will be happening this Wednesday. You have FOMC, the meeting in the minutes coming out. This is very important. Basically, give you a broad spectrum of how the Fed is looking at what is happening with our overall interest rates and how we need to expect and what we can be doing to expect what's going to be released from them as far as interest rate and hikes. The last time this happened was on April 6th. Now, if we go back to that specific day, we can take a quick zoom in here. You can see we actually ended up kind of stagnating, and then the day after we ended up rising, but ultimately topping out and coming back down. And then what happened right here, this is when Powell ultimately came out and said 50 BPS hikes are on the board, and those are going to be what's happening going forward. And we have not looked back since. Now, here is my question. Here is my statement from this range. In my opinion, I think we have a little bit possibly more upside coming into this range, into this overall trend that we're currently in right now, and most likely going to see some sort of rejection out of this range. That's what I'm looking at. Now, it's worth mentioning right now, I'm extremely liquid. If you follow me on Twitter, I did post earlier. I was like, today is a day trader's nightmare. It was extreme chop. And if we come down into about the 15-minute time frame, you can really see what's happening. You're getting a nice little wedge. You break down, you come back up. It's just back and forth. You're all over the place. So it's just kind of uncharted territory. But what I will say, and what my opinion on this is you're seeing some short covering going into this meeting. That's just what I anticipate. This is a lot of short covering, people taking profits on some of these shorts, readjusting positions. You're coming to the end of the month, and you came to an end of a pretty big option chain overall from the last week, and things are still rolling over. That's why you're moving like this into the upside with absolutely no volume. So you are moving to the upside, but just with no volume. Something in Discord that Jerry always says is that you kind of get these upside moves and you don't necessarily need volume to get to the upside. However, when you move to the downside, typically you need that volume. You need sell pressure to push you down. And that's why typically when you see this downside pressure, if volume does kick in and there's no volume to the opposite side, you see just straight down trending. You go from one day 408 all the way down to 388 the next day. So these are things you got to be looking at. And so that made me open my eyes to the point of too is sometimes you can get that upside, but you don't necessarily need that volume. And right now, that's exactly what you're seeing. It's an absolute chop fest. And going into tomorrow, just so you know, Powell is speaking as well, I believe around 2 p.m. Eastern. That time could be wrong. Check thefedreserve.com for the exact times. But that's what's happening tomorrow. So tomorrow could get interesting as well. So what am I looking for here? Where's maximum upside in my opinion? Now, I could see touching this trend as well, 398-ish. But also I'm looking about 401, 402, possibly around 400. So around this range right here, just depending on how we trade going into tomorrow. So maybe some upside movement. But personally for me, I just believe trading to the upside is not worth the risk right now. Until you get something positive from the Fed, I cannot remain or become a bull. So this is all just some sort of relief, dead cat balance until you get positive news from the Fed. And that's what I see happening right there. Going over to the Nasdaq, you're seeing a lot of the same movement, more upside here, more steady upside, less sideways movement, but you're seeing the terrible volume. It's very apparent what you're seeing. You're holding that trend. It's just nothing really good going on. And all day you're reading rejected around 12,000, really pushing you down below. I'm going to show you the Bookmap here in a second to really open your eyes to what volume is really doing. But ultimately here, it's just absolutely terrible. But I have major concerns about everything going on based on two things. One, you saw treasury yields rising as risk sentiment improved. Now, I don't think risk sentiment is improving. I think this is just straight up stupidity, absolute stupidity. This is so dumb that the risk sentiment is improving based on what? Based on what data? Because when we get to it, you're going to see the fact that inflation is still happening. Supplies are essentially still capped out on supply chain. So you look at this is just all nonsense on everything they're saying here. But when you go back to today, Saudi Aramco warned that before this whole COVID fiasco, that you were still going to see some sort of downside. He was still saying that the global oil crunch was still there. It was no matter what gonna happen. It was all over the news today, and oil went crazy. And basically what he was saying from this was oil was already having a supply issue. Based on investments, based on money coming in, no matter what, you were going to have this issue. It was the only hedge against inflation based on everything that's happening. And going to today, you opened up around 105 a barrel. You ended roughly at 110.6, but ultimately you pushed almost up to about the 112, 113 range, and it's looking like there's more upside potential here. What does that mean? As far as inflation goes, this has been one of the best ways to track it because since essentially COVID, when you hit $0 on the lows of negative oil per barrel, just you hit negative, which we've never seen before in our lifetime. And now you're pushing back up to around 115, high since Ukraine run 26, 127. It's been the best performing commodity stock, whatever you want to say, since COVID. It's been the best play. There's been no better play than oil. It's as simple as that. And then when we come and look at yields, look at the bounce back we're seeing from yields. I also mentioned this. I mentioned this yesterday or the day before when I made the video. I said we're going to start seeing a bounce back. Guess what's happening? You're bouncing finally on these yields. You're getting that bounce. And we said it was going to happen. And guess what? It's happening. As you get closer to the Fed meeting, you're going to start seeing this. The 30-year bouncing as well. These are things you got to be looking for because you're going to seeing that yield inversion. We're going back to it. That yield inversion is going to continue to concern us for a recession like it always does. This is the ultimate indicator for a recession. And I see this picking back up, getting back closer to the flat 1 ratio, which indicates a full inverted yield. But we can see what happened here, going all the way back to roughly 2008. Can even go back to 2001 to see the dot-com bubble. Look how long you sat here, and then boom, it caused that overall correction into 08, 09. Boom, caused that correction in 18 when you had that massive drop. So these are all things you got to be looking for, and this is what's really happening on the economy, and extremely, extremely concerning. So to me right now, all eyes are on the Fed meeting going into Wednesday. That's going to be the biggest scenario right now, but you also need to be looking at the support that you're sitting on and where you're sitting underneath. You're sitting below previous lows. You are bearish. Looking at the long-term chart on the Nasdaq and the SPY, you're below previous highs. This is extremely bearish. This has me targeting those new lows around 10.8 on the Nasdaq, and then on SPY, that has you targeting the lows of around 3.6 down to 3.5. And you can see here on SPY, once again, right below those lows, you can see you are extremely, extremely, extremely bearish here. So as you move down, you have to anticipate you come down to 3.7, maybe get some love, and then continue back down to 3.55, maybe a little bit lower from there. But ultimately, this is the range that you're targeting, and it's looking more and more likely. I've been giving you guys the updates on the market, how we've been moving, and nothing's really changing. You're going to get these relief bounce every once in a while, but look at this daily chart. You dropped from 455 all the way down to locally about 381 in a matter of 5-6 weeks. When we saw that pretty steep drop back in September from 290 all the way down to lows of about 233, which is about a 24% drop right there. But this is just disgusting. No relief has come. And I don't think you're going to start to see a relief until the Fed actually tells its people that, guys, we're probably going to see a recession. Yeah, it'll lead to some imminent downside, but most likely you'll start to see some bounces along the way as well and more healthier movement as they start to be transparent with the people here that are investing in the economy, because right now they're really just throwing people through a loop, and you're seeing all these lagging indicators start to catch up. And in my opinion, this is setting up for an absolute downfall. I'm telling you right now, the way I'm looking at Nasdaq, the way I'm looking at SPY, is they have nasty, nasty downside. And again, you can't be bullish until you get above 404, 403. And right now, I just don't see it happening. I see a little bit of a push coming, but I don't see it lasting. I see a giant bull trap coming in here, and I think this is another opportunity to play more downside. That's going to wrap it up for me. Like, subscribe, do what you got to do. More content is coming every single day. Have a good one, traders.